Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today, Jordan Roy Byrne, publisher of The Daily Gold, which can be found at thedailygold.com. Jordan also does a typically twice a month precious metals market update, which looks at the technicals going on in the gold and gold stock markets. Jordan, welcome back to the program.
Colin, thanks so much for having me.
Listen, I want to jump right in and talk about what we're seeing happening with gold stocks, even silver. For people invested in the space, it's a little bit disheartening to see the prices coming off this much. For one, we were in such a nice upswing starting in January of 2016, and that seems to have kind of come to a halt at this point. I'm certainly feeling very bullish still, but this has been a very, very tough pullback. So how much longer do you think this is going to continue, Jordan?
Well, I mean, we have to look at things in terms of price and time always, and there's really no easy answer. I mean, as far as price, looking at the stocks, I don't expect, I do expect some more losses here. We've already had quite a few losses since February in the stocks. I think it's going to continue. I simply put, I think it's possible the miners could go a little bit below their December lows. I think they will definitely retest their December lows. And gun to my head, that's when I think the next bottom would be slightly below the December lows in the stocks. With respect to gold, gold has really important support around 1220, and then on the monthly chart, it has 1150. So those are the levels that we should focus on. But it's important to note that the gold stocks have already discounted, I think, gold trading below 1200. We always talk about how they lead the metals, and we're seeing that again. So the miners have already priced in a sub 1200 gold price. And I think the larger issue, Colin, is this bull market is really not going to begin in earnest, or at least be reignited, until we see the stock market hit a peak and the economy roll over. And it will happen at some point. I don't think it's going to happen like in the next couple months. I think I'm not an economist, but we're starting to see data weakening, but some data is still strong. And so that's what we need to watch for over the next quarter or two is more economic data coming in weaker than expected, which is possible. And until the stock market just rolls over and the economy rolls over, it's going to be very difficult for precious metals to really begin a new bull market in earnest. We have seen stocks do well, and various juniors do well in recent months. It's important to note that in the 2016 bottom, Colin, the sector was completely bombed out, as we've talked about many times, but also the fundamentals for mining companies really bottomed in 2014, 2015. So the industry is in a much stronger position right now. And even if gold were to go down 10 or even 15%, I don't think that would really impact the industry that much compared to 2-3 years ago. So that's kind of my big picture view. Coming into the year, Colin, I thought that 2018 was going to be a better year than 2017. I thought we'd really be set up for a bigger move in 2018. I still strongly believe that. It's just a question of, when is the next important bottom? If I'm leaning to the bullish side, I would say probably in the summer. But if I want to be a lot more cautious than that, I would say we'll get a summer bounce, but maybe the next bottom would be sometime in the fall or at the very end of the year. So that's my big picture view of where things are here and now. Definitely still very bullish for 2018 and beyond, but call it neutral to slightly bearish for the months ahead.
Gold stocks have certainly fallen harder than gold. You've indicated that you think that much of the fall in gold prices have been already priced into gold stocks. So I want to ask a very direct question here. If gold continues to fall, and you can also point to what your downward targets maybe are, does that mean gold stocks shouldn't fall, or they're just not going to fall as much as one might normally expect?
Well, if gold continues to fall, the gold stocks will definitely fall. But I think a good amount of that damage has been priced in, but still not. I mean, not everything has been priced in. Whereas, I mean, if you're looking at where we're talking, GDXJ, for example, is at 31 right now. And I think it could come down. I think it's going to test 27, the December low for sure, but maybe it could come down to as much as 25. And I would note that based on some work that I did over the weekend, I concluded that GDXJ is probably artificially about 5 or 6% lower due to the GDXJ, the big rebalancing that's coming. So roughly speaking, maybe another 20% downside in juniors. But another thing to note, Colin, is that if the stock market kind of goes into blow-off mode, that would, I don't want to say that would help juniors, but in that scenario, that's much more bearish for gold than actually the gold stocks. So I don't want to say I think, I think that most of the damage has been priced in as far as gold stocks. I mean, if we were talking here and the miners were 10 or 12% lower, I would say yeah, most of the damage has already been priced in. But I think it's a little bit too early to call that. I mean, let's wait a couple weeks or a month and see where things are. And I mean, in that scenario, as I said, I'll just repeat that if the stock market goes into blow off territory, that's less bearish for the actual gold stocks than gold itself. I mean, that would be much more bearish for gold. And so in that kind of scenario, that's where you can see the gold stocks hold up really well against gold, even though gold wouldn't be right.
Jordan, silver is a metal that we haven't discussed very much in the recent past, and that's because silver has gotten quite boring. It's been in a long bear market, and people are starting to forget about it, focusing a lot more so on gold these days. I had David Morgan on the program last week. He's obviously the silver guru, and said that there was a very strong chance silver would drop from 18 an ounce down to 17 and maybe below. It's now dropped down to 17 an ounce. What do you think is in the cards for silver?
I think lower prices are in the cards for silver in the months ahead. Looking at the chart, it's very disheartening because silver got back up to 1850, which it's tested. I mean, I want to say, or you should just go back to 20. I'm looking here at my chart here. Yeah, if you go back the last 2+ years or so, I mean, it's tagged 1850 so many times. And it got up to it again, but it failed there. I mean, it failed twice in the last couple months. So that's very disheartening. And looking at the price action, I definitely see a risk that it's going to come down lower. And I definitely think it's going to test 16, maybe even go lower than that. But one interesting thing to note, Colin, looking at silver in my bear analog chart and looking at the 3 longest bear markets in silver, and I'm measuring those bear markets in terms of time. So to give you an example, I mean, let's say a market bottomed at $5, but then it did nothing for a year, and then it made a higher low at 507, and then it started to run to 7 and 8 after that. Now, in terms of time, you would say that bear market really ended at 505, but as far as price, it ended a year before at $5. So, I mean, it ends as far as in time. That is really the point when a new bull market is really beginning, and that means higher highs continuously. And so one thing I noticed with 3 past bear markets, 80 to 86, 80 to 86, 97 to 2003, and then I think we have 87 to 93 or 88 to 94, somewhere in there. But those 3 huge bear markets for silver, once they ended, silver averaged about an 83% move in around 12 months after that low. So where we are here and now, the longest bear market in silver was the 80 to 86 one, and silver bottomed about 5 months from now in early October. So let's say silver, I mean, this would sound very, very bad for the listeners out there, but, silver's trading around 17 right now. Let's say it came all the way down to 14 and fairly close to the 2016 low. But if that was the actual end of the bear market in terms of time, and we're just taking that 83% average move from history, if you project that forward, that puts silver at almost $26 in the fourth quarter of next year. So with respect to silver, I mean, call me cautious and bearish over the months ahead, but later in the year or early next year, that could prove to be the point when silver really starts rising aggressively. And so whenever this bull market really begins in earnest and the metals rebound and then they keep going higher, which they failed to do in summer 2016, I mean, silver is going to make a massive move higher in that scenario. So as I just said, it doesn't look good here and now over the next couple months. But once silver starts to move, you will get a very big move higher according to history, and will break above that $20, $21 resistance. And so I think that's probably going to happen sometime next year.
Jordan, looking at price targets, what's your downside price target for gold in the next couple months? And then using the HUI as a proxy for the gold miners, what do you see as a potential low point for the HUI?
Well, for gold, again, the key support targets are 1,200 and 1,150 is strong support on the monthly chart. So I don't have as strong of opinions on gold. The one thing with gold is it's good that it rallied all the way up to 1297. If gold only rallied up to 1250 or thereabouts recently, it would have been more bearish. It would have showed more weakness. I think it's being held up a little bit by geopolitical factors. So given those things, it's difficult to see, is gold going to fall back in line with the fundamentals, which, not to go off course, but the fundamentals are not there. I don't want to say they're bearish, but the fundamentals have peaked. I mean, this is very important. I know I'm going off course, but again, real rates are the driving force for gold. And so the problem why the market is weak right now overall is inflation has peaked. I mean, if you look at commodity prices as a whole, they're leveling off or rolling over. And then if you look at very short-term bond yields, like the Fed funds rate or the 2-year, the Fed still, I mean, they're going to hike in June. It's almost 100% priced in. They'll hike one more time after that. And so maybe even a third time if things hold up, if the stock market holds up well for several more months. So looking at the market, you have short-term rates are going to be rising and inflation has peaked. I mean, that means real rates are going to be going higher, which is negative for gold. So that kind of explains the bearish outlook over the next 3, 4, 5 months. And why I say is gold going to return, to those fundamentals where it should be a little bit lower than it is right now. But anyway, I mean, if you put a gun to my head for gold, I'd probably say 1150. Now, looking at the HUI, just give me a second here to bring that up. The December low's at 160. The HUI is at 185 right now. I think we'll definitely see 160 retested. Maybe the low is 145 or 150. I mean, somewhere in there, that would be my guess. But to be more on target, I would say the December low 160. I mean, if the miners go a little bit below the December lows, Colin, that's the time we want to be buying. In my opinion, I think they're going to go a little bit below the December lows and kind of scare some people, freak some people out. But I see that as being the next low where. I mean, if you buy something around that low, or even if you buy something that's trading around, a lower technical support and is trading well off its highs, I mean, that's a good low risk buy. You can buy that and you don't have to worry about this volatility for the next 3-6 months. You can buy that and hold it going forward. And same with the overall sector. If we go a little bit below the December lows in the miners, I think that's the time we want to be buying.
Jordan, thank you for coming back on the program and sharing your thoughts on the gold markets moving forward. Once again, Jordan's website is thedailygold.com. He has a great free list, and if you'd like some more expert advice, premium service that Jordan offers. Jordan, thank you so much for coming back on the program.
My pleasure. Thanks for having me, Colin.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on?